Good evening, everyone. I hope you can hear me.
Good evening, sir,
Okay, I hope we are all doing well.
by the grace of God.
Okay, we are done with budget and budgetary control, and we are going to look at another important topic, which is standard costing and variance analysis. Standard costing and variance analysis. And we are doing standard costing and variance analysis because you need the understanding of flexible budget to be able to understand the standard costing and then the variance analysis. All right. You see, in our individual lives, we can say that, okay, this particular MA that I'm going to write right now, I'm not expecting or I'm not going to get less than 50. Okay, in that case, that is your standard. You're not going to get less than 50. That is your standard. And if you are saying that you're not going to get less than 50, it means that you're going to do everything to get more than 50. Even if you don't get par, it should be what? 50. We can say that is your standard. That is the standard that you are setting for yourself. That is the target that you are setting for yourself. So if you talk about standard, we are talking about you setting a benchmark against which you are going to measure your performance. So a day, I don't want to spend more than 10 cities. So at the end of the day, if you spend more than 10 cities, what are you going to say? You say that, okay, you have spent more than your standard or your benchmark. So in that case, what causes the overspending? Those are the questions that you'll be asking yourself. So if you talk about standard, basically, we are talking about benchmark. We are talking about benchmark. Standard can be understood to be a benchmark against which performance is going to measure. So we are saying right now in my class that my students, none of you are going to get less than 50. That is the standard I'm setting for you.
Amen.
That is the standard I'm setting
Amen.
for you. So if at the end of the
Amen.
day, some people they get 49, I have to ask myself, what is the reason or what is causing people to get the 49? I have to investigate that. So if we talk about standard, we are talking about benchmark, a benchmark that we are going to use to measure performance. So at the end of the day, we have the benchmark. Nobody is getting 50. At the end of the day, we find out after the exam, after the result, we find out our standard being met. Is everyone getting 50? Is everyone getting above 50? Okay, if some people are not getting 50, what is the cause of that? Then we try to investigate why people are not getting what? The 50. Okay, you see, I can confidently say that, okay, all my students are going to get more than 50. I can say this based on past performance, isn't it? I can say this based on the past performance of my student that, okay, all my students, they don't score below 50. Okay, I can use this to set a standard that everyone must get what? 50. So standards can be set based on previous performance of the organization. Previous performance of organization standard can be set on a previous performance organization. We can also use the achievement of our competitors to set standards for the organization. I can tell you that, okay, people in the ICA college, their performance, they don't get less than 50. So we are also achieving that today. Nobody is going to get 50. So I'm going to use the performance of the college to set a standard, to set a benchmark for my students. We can also use the industry performance, what is required for us in the industry to set what? Standards. So basically, these are the ways of testing standard. If you talk about standard, we are talking about benchmark, a benchmark against which performance is going to be measured. So if you are saying that, okay, every day I don't want to spend, every day I will spend only 10 cities. It might happen that at the end of the day, you spend 15 cities. What is causing that? You can see that you are spending more than your standard. That is the variance that we are talking about. So if you are talking about standard, we are basically talking about benchmark against which you are going to measure your performance. MA, I don't want to get 50. More than 50 is your target. That is your benchmark. At the end of the day, if you get 52, what causes me to get more than 50, you will try to investigate that. So that basically that is what we call standard. Basically, that is what we call standard. Standard is a benchmark, and standard can be set based on your previous performance or the past performance. Standard can be set based on the performance of your competitor. You can look at the performance of your competitor and say, okay, this organization, these people are achieving this, so we also want to achieve more than them. You can also look at the performance of the industry, the requirement of the industry, and use that to set a standard. That is standard. Let's come to what we call standard costing. Standard costing. Standard costing is just comparing your standard cost and revenue, your standard. I want to get 50. If I don't get price at 50, at the end of the day, you got 49. So you compare your standard with your actual performance. That is what we call standard costing. And after comparing that, what are you going to do? You have to investigate why you are getting 48, not the 50 that you want to get. Is it that you are sleeping too much? Or is it that you are going to party? What is the cost? You have to investigate it. So standard costing is you comparing standard cost or standard performance to the actual performance and trying to investigate what is the cost of the deviation. That is the standard costing. That is the standard costing. We have basically 4 types of standard. If you're talking about benchmark, we have 4 types of benchmark or 4 types of standard. The first one is what we call ideal standard. Ideal standard. The first one is what we call ideal standard. Ideal standard. The first one is what we call the ideal standard. Ideal standard. What do we mean by ideal standard? Ideal standard. If we are talking about ideal standard, it means that I'm saying that the 8 people on this call, the 8 people in this particular meeting, because we are 9 and I'm the 9th person, I'm not writing MA. So the 8 people on this particular or in this particular class, I'm telling you that none of you should get what? Below 50. Forgetting about the fact that we are not equal. Some people, they might end up getting what? 49 or 48. So if you talk about ideal standard, we are setting the standard under a situation where we are not making any advances for what? Potential losses. We are setting the standard under a perfect working condition. We are not, it's very strict. We are not expecting anyone to fail. Meanwhile, we know that individuals, we are different. So if you are setting a standard where you are not making any provision for unforeseen events, we are saying that you are doing what you call an ideal what? Standard. Standard that you are not taking into consideration what will happen. I'm saying that everybody over here should get 50. I've forgotten the fact that we are not the same. We are not equal. We have individual differences, but I'm giving a target with all of you have to pass. At the end of the day, some people will not pass. And you can see that the standard has not been achieved. So if you say ideal standard, we are saying that the standard had been set under a perfect working condition. There is no allowance for normal losses, any unforeseen event. We are not making any provision for those ones. That is what we call ideal standard. Ideal standard, there is no provision for losses. You can be producing, if you want to produce 1,000, you are saying that people to produce 1,000. You can be producing and the machine will break down. But for the ideal standard, we don't make provision for the breakdown of the machine. We don't make provision for the losses that we are going to suffer as a result of mishandling of the material and those things. We don't make provision for them. That is under the ideal standard. No provision is made under this particular standard. We assume that we are going to achieve everything. No provision is made for losses or anything. No room is for losses or anything. An ideal standard will always end up not being achieved because no, there is no way you can achieve something without losing anything. So that this standard will always end up in losses. Will always end up in losses. But if you come to attainable standard is the one that we make provision for normal losses. We make provision for normal losses. That's okay. Though I'm telling people that all of you should pass, maybe it can be some people like 2 people that will not pass. So I've projected that maybe 2 or 3 people will not pass. So if 3 people don't pass, I will not be disappointed because I have made room for that particular people not passing already. So for attainable standard, what we do is that we make provision for normal losses. We know that if you are a seamstress or a tailor, if you are cutting, sometimes you might not cut the cloth well. So you have to make provision for that. But if you are saying that, okay, the person is saying that, okay, before you can get up and down, you need to bring 2 years. You need to bring 2 years. And the person is thinking that if he is cutting, he will cut perfectly. But it cannot be, that is not, it's not absolute that you are going to be cutting and you will not make any mistake. So you are also bringing the 2 years for the top and down. At the end of the day, the person made a mistake in the cutting. It means that top and down, you can't get it because there is no provision. You should have bring 2.5 years so that we assume that the half years, if all things being equal, it will cover any mistake that will come from the cutting. That is what we call the attainable standard. We make provision for normal losses, make provision for unforeseen event that will happen during the production process. Let's come to basic standard. Basic standard. Basic standard is a standard that is set for a long period of time. It doesn't change. So if our performance is that we want to be, the standard is that at the end of every year, we should be producing 10,000. So this standard will be set for 5 years. That is what we call the basic standard. That is what we call the basic standard. A standard that is being set for maybe a long period of time without changing. We don't change it. It is okay. It is always set for a certain number of period. So we setting that, okay, over the 5 years, we should be able to produce 10,000 units of tomatoes, or we should produce 10,000 units of bottles of water, anything. That this is for 5 years. We are not going to change it. We are not going to alter anything. It will be there for 5 years or 10 years. That is what we call the basic standard. A standard that doesn't change, and it is being kept for a longer period of time. That is what we call a basic standard. We also call something current standard. Current standard is being for maybe we want to stay standard for 3 months. So that is the current standard. So we normally set the current standard from the basic standard. We normally set the current standard for the basic standard. So the standard for this period, that is what we call the current standard. The current standard. The current standard. All right. Let's look at the factors that you have to consider before you set standards. If you want to set standards that you are going to get more than 50 in the MA, what are the things that you have to consider before you'll be saying that? Baba, you are saying that this paper you are getting 65. That is your standard. That is your benchmark. What are some of the things that you consider before telling yourself that you are going to get 65? If you don't get 65, then it's not you.
Yeah, I think I'll consider my resource base first. That is investment into the paper.
Okay.
And 2, my time.
Okay.
Is very crucial.
Okay.
And also commitments.
Okay.
And also my prediction about which topics are likely to come and which ones will not come.
Okay.
And also prepare my mind for any other thing that is not within my control.
Okay. All right. That is very nice. That is very
For
nice.
instance, if I'm buying time to read at the 11th hour, then I fall sick. May God forbid. So I should just start seriousness right from the word go.
Okay. All right. All right. That is nice. That is nice. Habakkuk, you are saying that you are going to get 70. What are the things that you consider before telling yourself that this MA I'm going to get 70?
Okay. Before I can say that I am going to get 70 in this paper, then I should be able to cover about 90% of whatever I am supposed to know.
Okay.
I must be ready to sacrifice a lot, and then also my sleep as well.
Okay.
Yes. So I think these are the 2 key ones.
Okay. Portia, if you are saying that you are going to get 70, what are the things that you are going to consider before telling yourself that you are going to get 70 in this paper? What are the things that you consider? that okay, or upon all these things, okay, I can get a 70. What are the things that you're going to consider, Portia?
I have to start learning earlier before time.
Okay.
I have to make enough time for everything because it's very, very difficult to stop.
Okay. That is nice. All right. But before I'll move on, I want to tell you that the types of standard, take it very seriously, especially the attainable and the ideal one. They can ask you the difference between the two. For ideal one, it's a standard set under a perfect working condition, thinking that there will not be any losses coming from the process. So we don't make provision for any losses, but for attainable provisions, rooms are being made for unforeseen events like maybe material wastage due to mishandling of the material, power outage, and those things. We make provision for those ones. But for basic one, it's a standard set for a longer period of time, and it doesn't change. Current standard is a standard set based on the current performance, what we want to achieve currently. That is the current standard. Take them very seriously. The types, take them seriously. They are very important. MA, you are going to see question on theory and calculation. All right, let's move on. For me, I'm not going to get 70 in the exam, so I'm not even going to set any standard for myself, and I'm not going to consider anything. Okay, but if I should say that I'm going to pass the exam, first of all, I have to look at my accumulation level. Okay, if I want to learn, like what amount of this thing that I can learn a day in an hour, how many pages can I learn in an hour? I have to consider that. Do I have the money to go for the classes? What book am I using? I have to consider a lot of things before saying this and this. But organizations also have to consider certain things before they will set a benchmark against which they are going to measure their performance. So the factors to consider when setting standards. The first one is the capacity of the business. You talk about the capacity of the business, you are talking about their non-current assets. Their assets, that is the capacity of the business. We have, look at this one. What's the company producing Belacqua? What is the name of the company producing Belacqua? What is the name of the company producing Belacqua? So we all, hey, Asembeni. All right. Okay. Let's assume about Habakkuk. You have a company that you have only 2 employees. And you people, you produce bicycles. And you are telling them that within the year, you are going to produce 100,000 bicycles. Can that be possible? Habakkuk, you have a company that you produce bicycles and you have only 2 employees, 2 workers. And you are telling them that at the end of the first 6 months, they should produce 100,000 bicycles. The standard that you are setting, is it favorable or is something that will not even be achieved? Habakkuk, can you hear me?
Sir, your line was breaking. I don't know if it's from my end or your end.
Really?
Yeah.
I'm saying that you have a company that you produce bicycles.
Mhm.
And you have only 2 employees, and you are telling them that at the end of the first quarter, which is 3 months, they should produce 100,000 bicycles. Can that be possible?
Oh no.
So
I don't think so.
It seems it means that the standard that you are setting for them is something that there's no sense in it, isn't it?
Yeah.
So sometimes the first thing that you have to consider before you can set a standard is to look at your capacity. Do you have the employees to achieve the standard that you are setting for them? Do you have you are saying that you are producing bicycles and you have only one machine that produces the bicycles and you are expecting the 2 of them to be using the same bicycle. Do you think they can produce 100,000 at the end of the 3 months?
No.
But if you have maybe 5 machines and you have about 10 employees, yes, it is justifiable for you to give them that particular target. Are you okay? Okay. So sometimes you have to look at the market conditions. The market conditions. You are saying that they should produce 100,000. Do you have the market? Do you have the demand for the 100,000? Do you have the demand for the 100,000? No. Are you sure that if you produce all the 100,000, people will buy? No. So sometimes you can also set standard based on the demand that you have. Okay, this is the demand that we are having for the market, so let's produce this. But a situation where you are producing a typewriter and there's no typewriter in the system again, and you are telling your people that they should produce 2,000 typewriter, it doesn't make sense. It doesn't make sense. So the next one is the environment that you are operating in. The environment that you are operating in. The environment that you are operating in. The environment that you are operating in can also determine that the source of revenue or the finance, where you are getting the money from. You don't have money, you are telling them that they should produce, and where will you get the money to buy the raw materials to produce? That is also another way, another factor to consider. If you have time, read on the advantages and disadvantages. Let's move on to variance analysis. Variance analysis.
Please, for
Yeah.
will you elaborate a little on the environment, because it's vague or it's broad?
Okay.
Because if you come to think of it, you can subsume the market conditions into the environment because it's part of the environment.
Okay.
So I want specifics, like which environmental factors will you have to consider?
Okay. The environmental factor can be the climate, the changes in the environment, the climatic factors. Even sometimes you can also talk about the political, the legislation and those things. Sometimes you can talk about.
Okay.
Right. Are you okay now?
Yes, sir.
Okay. So if you have time, read about the advantages and disadvantages. Let's look at what we call variance analysis. Variance analysis. Variance analysis. Variance analysis. Okay. Okay. The target is you want to get 55. At the end of the day, you have gotten 65. What is happening? The standard that you set for yourself was 55. But after the result has been released, you have gotten 65. What is happening?
You have more than achieved your standard.
Which is, you have achieved it by how much?
By 10.
By 10 marks, isn't it?
Yes.
Okay, so the difference between the standard and then the actual result, the standard is 55, and then the actual result is the 65. The difference between that is what? Is the variance.
The variance.
Is the variance. So the variance is the difference between your standard and your actual. That is the variance. So this variance can be favorable or what? Adverse. So if you want to get 55 and you have gotten 50, what is happening?
Adverse 5.
So you have underperformed by what? 5. So if you talk about variance, it can be either favorable. If it is favorable, it means that it is going in your favor. That is favorable. If it is adverse, it means that it is going against you. It is going against you. That is what we call variance, the difference between the standard and then the actual performance. Let's look at this. Let's look at this. We want to use 2 kilograms for every unit that we want to produce. We want to use 2 kilograms for every unit that we want to produce. At the end of the day, we produce 20,000 units using 50,000 kilograms. 50,000 kilograms. Under normal circumstance, how many kilograms do we have to use for the 20,000? Under normal circumstance, how many kilograms do we have to use for the 20,000 unit that we produce?
40,000
It should have been
kilograms.
40,000 kilograms, isn't it?
Yeah.
But what was the actual kilogram used? What was the actual kilogram used?
50,000.
So what is happening there?
There's adverse of 10,000 kilograms.
10,000 kilograms. It means that you have used 10,000 kilograms in essence, isn't it? All right. Let's come here. You want to buy, you are saying that 1 kilogram, the money that you are going to spend on 1 kilogram to be 2 cedi per kilogram. 2 cedi per kilogram. At the end of the day, you purchase 50,000 kilograms at 110 Ghana cedis. At 110 Ghana cedis. Under normal circumstance, how much should you have spent on the 50,000 kilograms? You want to spend, your target is that you want to spend 2 cedi per kilogram. So every kilogram that you are going to buy, you buy it at 2 cedis. At the end of the day, you bought 50,000 kilograms and you paid 110,000 for it. And I'm asking that under normal circumstance, how much should you have paid for the 50,000 kilograms?
100,000.
100,000. But you end up paying what?
110,000.
So what is happening?
Adverse of 10,000.
Adverse of what? 10,000. Adverse of 10,000. This is all about what we call the standard costing, and this is how we calculate them. Let's come to, you want to use 2 hours. You want to use 2 hours. 2 hours per unit that you are going to produce. At the end of the day, you produce 1,000 units. You produce 1,000 units, and you use 15,000 hours. Under normal circumstance, how many hours should you have used for the 10,000 unit that you produce? Okay, let me make this one to be 1,005. Okay. You want to use 2 hours per every unit that you are going to produce. That is your standard. That is your target. And at the end of the day, you have produced 2,000 units using 1,005 hours. And I'm asking that under normal circumstance, how many hours should you have used on the 10,000 units produced?
Is it 1,000 units or 10,000?
10,000 units.
You
It's
put
1,000 units, right? All right, let's move on. 1,000
Yeah.
units. How much do you
So
have?
you use 2,000.
2,000 hours, isn't it?
Yes.
But you use what?
1,005.
1,500. It means that you have saved what?
500.
You have saved 500 hours. Okay. So this is how we do the variance analysis. This is how we calculate the variance, and this is how we calculate the variances. If you understand it like this, it will be okay. But I'll still give you the formula. People that want to work with the formula, I'll give you the formula. You send it to the exam hall. So we are going to look at how we calculate variances. We calculate if you are producing, you are going to incur cost on labor, material, variable cost, and also the fixed cost. So we basically calculate the variances for these items. If you are producing, you are going to incur cost on what? Material. So you are saying that, okay, material, if we want to buy part, the cost should not be this. If you want to pay for people, the workers, we should not pay them more than this. At the end of the day, you might pay them more than what you are expecting. So you have to look for the variance for them. So the variances, we look at all the variable items, which is the material, the labor, the variable overheads, and also the fixed item, which is a fixed cost. It can be fixed advertising cost, fixed selling expenses cost, and those ones. So we calculate the variances for them. We calculate the variances for them. So let's look at the breakdown of variances. The breakdown. We have the direct material cost variances. We have the direct labor cost variances. We also have the direct variable overhead, fixed overhead. So we are going to do the variances for all the cost of items, or the items that are included in the total cost of a company. So let's look at this example. Let's look at this example. Let's look at this example. Okay. We are saying that for any material that we are going to buy, we should spend 2 cedis per kilogram for that. Per kilogram for that. And at the end of the day, we purchase 20,000 kilograms. We purchase 20,000 kilograms at okay. At the end of the day, we purchase 20,000 kilograms at a cost of 95,000. As a cost of 95,000. Okay, 95,000 is too much. Why? Your procurement officer, he doesn't know how to bargain. Let me make it 50,000. Okay. So we want to, our target is that every kilogram of the raw material that we are going to buy, we should be able to buy it at 2 cedis. By the end of the day, we bought 20,000 kilograms at 50,000. How much should we have spent on the 20,000, all things being equal? How much should we have spent on the 20,000?
40,000.
40,000. Okay. But what is happening now? We are spending what? 50,000. It means that we spend what? We spent 10,000 in what?
Extra.
Excess. So, and this will give us what? Is it adverse or favorable?
Adverse.
It's adverse. So this is how we calculate the variances for these ones. Just understand it like this and you are okay to go. That's why I'm saying that you need understanding of the flexible budget to go about it. Let's look at how to calculate direct material cost variance. Let's look at direct material cost variance. Okay. So the assumption is that we want to buy 1 kilogram at, we want to buy 1 kilogram at 2 cedi, 1 kilogram at 2 cedi. Okay, let me make it kilogram. Let me just make it 2 cedis per kilogram. 2 cedi per kilogram. Okay. 2 cedi per kilogram, isn't it? All right. 2 cedi per kilogram. 2 cedi per kilogram. And we produce, the unit that we produced was 1,000 units. And we are saying that the unit that we have to use, for the kilogram that we are going to use for every material is 2 kilograms per unit. At the end of the day, we use what? 20,000 kilograms. We use 20,000 kilograms. And we bought this at what? 100,000. Okay, let me make it 25,000. We bought it at 25,000. We bought it at 25,000. Okay. Okay. So how do we calculate the direct cost variance then? We want to purchase 1 kilogram of the material at what? 2 cedi, isn't it? And we also want to use 2 kilograms per every unit produced. So under normal circumstance, if we want to, let me make this one to be 3,000 so that it will not be too much like that. Okay. It means that this particular thing means that we have used 3,000 kilograms for the 1,000 units, isn't it? Is that a meaning? We have used the 3,000 kilograms to produce 1,000 units, isn't it? Is that a meaning?
That is, we program
Yes.
to use 2 kilograms to produce 1,000. That is the standard we set.
Okay, but we want to use 2 kilograms per every unit that we are going to produce. At the end of the day, they are telling us that we have bought 3,000 kilograms at a cost of 25,000. It means that we have produced the 1,000 units using 3,000 kilograms, isn't it?
Yes.
Okay. Under normal circumstance, how many kilograms do we have to use?
2,000.
2,000. So these 2,000 kilograms, how much are we buying one?
2 cedis.
So what would have been the cost that we should incur?
40. 40.
It should have been 40 or 4,000.
4,000.
4,000.
It should have been 4,000, isn't it? So
Yeah.
let me reduce this figure to 5,000 so that it will not be
It's
plain.
too much.
Okay. So we do what? We should have bought what, based on our budget, all things being equal, we should have spent 4,000 on the material. But we spent how much?
5,000.
5,000. It means that we have spent what? 1,000 in
More
what?
than budget.
1,000 in essence.
Adverse, yeah.
This is how we calculate direct material cost on total basis. On total what? Basis. On total basis. But direct material cost is being divided into 2 portions. Into 2 portions, which we call the direct material price variance, which has to do with the purchase. And also we have the direct material usage. In terms of usage, if you want to use, what are we going to use? So let me let me bring those figures there. Our standard is the cost is 2 cedi per kilogram, isn't it?
Mm.
And our usage is what?
2 kg per
Kilogram.
unit.
Per what?
Per
Units.
unit.
Okay. Let's come to the actual performance. Actual is, okay. Actual, the material now purchased. The total material that we purchase or use for the production is now
3,000.
is 3,000. Okay, 3,000 kilograms. 3,000 kilograms. What was the cost incurred? Material cost.
5,000.
The cost is
5,000.
5,000. Okay. Okay, what is the unit produced? What is the production?
1,000.
1,000, isn't it? All right. So 1,000 units. Okay. Okay. So we are saying that the total cost that we should have, the total money that we spent in excess was 1,000 adverse, isn't it? All right. Let's come to
Yeah.
this. The question with this information, the question can ask you, calculate the material price variance. The price, then we are coming to the purchases. How much should you have paid for the material that you bought, and how much did you pay? The material that you bought, how much should you have paid for?
Linus,
Yeah.
please, can I ask something?
No.
Okay.
If you have a question, ask. Don't be asking me, you are giving me a permission to say yes or no, which I'll always say no. And you'll be disappointed because you really want to ask your question. So just go ahead and ask your question. Is that correct?
Please. No.
Okay.
Please, the material, the
But
one
Kathy is
that
the one talking. So who is that? Okay, let's move on.
the material
Yeah,
in kilograms,
yeah.
the standard was to buy 2 kilograms times 1,000. Am I right?
You say the standard is to buy.
2. We are using each each production unit that we produce, we will use 2 kilograms of the
Okay.
material.
Okay.
So if we are producing 1,000,
Okay.
then it means we'll use 2,000.
Yes.
Yes.
Then the actual,
Okay.
we went to buy 3,000
Okay.
kg.
Mm.
I'm still listening.
So does it mean that we, instead of we going to buy 2,000 kg, we went to buy 3,000?
Yes. And the 3,000 is the one that we use for the production. It's not that we
Oh,
bought it and some are remaining.
Okay.
Are you okay?
Yes, please. I'm
Okay. It's
okay.
not that if there will be a closing balance of the material, the question will give it to you. It means that okay, you have bought 3,000, you use 2,000, and the 1,000 is remaining there. But the assumption is that you have bought the 3,000, and that is the 3,000 that you have used for the production of the 1,000.
Okay.
Are you okay?
Yes, please. I'm
Okay.
okay. Thank you.
All right. So I'm saying that if you come to the price level, what was the material that we bought? What is the quantity of the material that we bought?
3,000.
3,000.
kilograms. Under normal circumstance, all things being equal, how much should you have paid for this?
Times 2.
And that will give
So
us
6,000.
6,000. Okay. That will give us 6,000, isn't it? But how much did we pay?
5,000.
5,000.
5,000. So what is happening there?
We paid less.
You paid less, and that will be what to us?
Favorable.
Favorable. So can someone find the actual cost per kilogram for me? Can you do that?
It's 1.67.
Okay. 1.67. Okay. That would be 5,000 over 3,000, isn't it?
Yes.
Okay. So if you get the actual cost, you can also do it. All right. So we are having 3,000 multiplied by the 1.67 there. And that will give us 1.67 something. That will give us 5,000. So you ask yourself, are you paying more or you are paying less?
We are paying less.
So it means that you have made provision for 6,000, but you are now paying 5,000. So you have to return the what? The 1,000 back. That is why we are saying that it is going against us. We are saving the money. It is going in our favor. So we say the difference is 1,000 what? Favorable. Are you okay? All right. So if you need to spend what? How much do you have to spend before? You need to spend 2 cedi, isn't it?
Yeah.
And
That's the standard price.
Yeah, you have spent what, 1.67, isn't it?
Yes.
It means that you are saving how much? How much are you saving?
When
You are saving 0.33 something, isn't it?
yeah.
So this,
Yeah.
if you should have spent all the 2,000, all the two, it means that you are going to use the remaining figure to buy all the 3,000, isn't it?
Mm-hmm.
So for you to know the savings that you are making, you just have your difference multiplied by the quantity that you bought, which is what?
3,000.
And that will give us 1,000. Are you okay? So that is why they do the standard cost minus the actual standard price minus the actual price multiplied by the actual material purchased.
Mommy, carry
That's how they have the formula, because you are making a savings of that. That savings, if you shouldn't have made that savings, you should have used it to buy the 3,000 kilograms. So multiply it and see, okay, that money should have gone out, but you didn't send it. So you are saving it now. That is why we have the material price variance is calculated as standard price minus the actual price multiplied by the actual quantity purchased. Are you okay? All right. This is how you can also do it. Let's count the material usage. Material usage. The assumption is that we buy the 3,000 and use all. That is the actual, isn't it?
Yeah.
Okay. So all things being equal, what is the number of the how many quantities do we have to use? All things being equal.
2,000.
We should have used 2,000. It means that 2 kilograms times 1,000 units, isn't it? Okay.
Yes.
So let's count to standard. Let me put a standard here. We should have used 2,000 kilograms, isn't it?
Yes.
2,000 kilograms. Okay. But the actual, what was the actual unit used?
3,000.
3,000. Okay. Okay. That is the usage, isn't it? Okay. Assuming nothing happens, we still have the 2 cedi. The cost doesn't change. We still have the 2 cedis. Assuming the cost doesn't change, we still have the 2 cedis. What are we going to do? We are going to buy 1,000. Is it 1,000? The difference between the two. We are saying that we have to use 2,000, but we are now using 3,000. It means that we are going to buy additional what? 1,000, isn't it? We are going to buy additional 1,000 before we can complete the production, isn't it? Is that the case? I have 12 people here. We're supposed to use 2,000, but we are now using 3,000. It means that we have to go and buy additional 1,000 to complete the production, isn't it?
Yes.
Okay. All things being equal, the cost does not change. The cost that we projected for is the same cost that we are paying. How much are we going to buy this?
2 cedis.
It will be at 2 cedis, isn't it?
Yes.
And that will be the total amount that we are going to spend.
2,000 adverse.
2,000, isn't it? That will be adverse or favorable?
Adverse.
Adverse.
Yes.
Okay. So compare the two. You have one which is favorable, one is adverse. What will be the figure now? What will be the net figure? They are all relating to material.
The
Negative
net will be
plus
1,000 adverse.
that will be 1,000 adverse. What did we get for the total? Is 1,000 adverse. So you can divide this total into two, which we call the material usage variance and also the material price variance. How do we calculate them? This is the idea of calculating them, but I'll give you the formula. This is the reason why we have the standard quantity minus the actual quantity times the standard rate. That's how we find the material usage. So if you are writing, right, this is how we get it. Material price variance. If you understand how I do it, you can do it in the exam like that. It's not compulsory for you to use the formula. Okay. So the material price variance is calculated as a standard price into bracket the standard price, which is the SP minus the actual price, all times what? The actual what? Quantity. All times the actual quantity, because you are going to buy the quantity. This is that if all things be equal, this is the amount that I should have bought it, but this is the amount that I'm paying for it. So the actual quantity purchased, not the actual quantity used. It is the actual
Yeah, I
quantity
was going
purchased.
to ask you that.
All right. Not the actual quantity used. The use is different. The one that we use is not the one that we purchase. So we are talking about the money that we spend in buying. So actual quantity purchased. But sometimes the usage can be the same as the purchase. So you have that. Let's count to how do we calculate material usage variance? Material usage. Material usage. Do you know that if I should be serious, I can finish the standard costing today? But I don't want to be serious, so let's move on.
Don't be.
I have taught you the labor too already, because the labor also follow the same format. So what do we do here? What do we do here? We subtract the actual quantity from the standard quantity, isn't it? We subtract the 2,000 from the 3,000 and we have negative 2,000. We multiply by the 2 cedi, isn't it? Okay.
So
So
the
that is
standard
so we have the standard quantity.
minus the actual quantity.
Standard quantity minus what?
Actual
The
quantity.
Actual quantity times what?
Standard price.
The standard rate. Are we okay?
Yeah.
Okay, if you want to memorize it in the exam, you have to memorize it. But I'm just telling you how the idea about those things. I've taught you how to find material variances, labor variances, and also variable overhead variances. Okay. if you count to labor also follow the same one. So we have the labor rate. They will give you a labor rate variance, the labor rate, which is equal to the standard rate.
Rates
How much do you have to
minus
pay?
the actual
Standard
rate
rate minus the actual money that you are paying to them per hour. Actual
times the
rate,
number
all
times the
multiplied by the hours worked.
work.
Hours what? Worked. You are
Work.
going to pay them based on the number of hours that they use on the work. Are you okay?
Yeah.
So times the hours that you are paying for.
Please,
Hours.
info, does actual hours worked or hours paid?
Okay, hours paid.
At times you get these two
I really want
scenarios.
to talk about the idle time variances, but let's stay. Okay. Sometimes you can pay them for hours that they didn't use. So you are paying, okay, hours paid for. Let's use this hours paid for. That will be better. Hours paid for. Okay. If you come to the labor what? What is the name of that? The second one? Labor efficiency what?
Rates.
Okay. Labor efficiency variance is standard hours. Standard hours minus the actual hours worked.
Times the
Actual hours worked.
times the rate.
Actual hours worked. Multiplied by the what?
The rate.
The standard rate
Rate.
is the same as those one, but just that we are replacing them. If you count to variable one, last I was telling you that we assume that variable overheads vary in proportion to what?
Level of activity.
Labor hours. It varies in proportion to labor hours. So for the variable overheads, to the same thing that we do, we use the same labor hours, the same formula for the labor hours, but just that the rates are going to be different. The rates are going to be different. So variable overheads, we use the standard rates, which is the question will give you the standard rates. The standard rates minus the actual rates times the actual labor hours paid for. Actual labor hours what? Paid for. So it is the actual labor hours paid for. We use the labor hours paid for. If you come to the, okay, this one, it is called variable overhead expenditure. You'll be seeing them in the exam, like if they say variable overhead expenditure, they can also say variable overhead volume variance or something like that. That is the same as the usage for them and labor efficiency. It's the same thing that they are talking about. But just that they say they want to deceive us with the English, they are giving me different name. Okay. Efficient volume. This will be volume. This will be calculated based on labor hours. So the standard labor hours, minus the actual hours worked for, times the standard rate of the variable overhead, which will be given to you in the question. Let's count to how we calculate fixed overhead. Do you have any about how we calculate the fixed overhead? My bosses, Kathy, give me how we calculate
It's
overhead.
comparison of the standard overhead cost
Okay.
with the actual overhead incurred.
Okay. That's nice. That is a nice attempt, but that is applicable to only one of the costing system that we know. If you are using marginal costing method,
Yeah.
if you're using marginal costing method, we know that we have two costing techniques, isn't it? Marginal and what?
Absorption cost.
Okay. If you're using marginal, what do we do with the fixed overhead? What do we do?
We treat it as period cost.
We treat it as a period cost. We just write it off against what? Our profit, isn't it?
Yes.
It means that if the overhead that we are expecting to incur is 10,000, and at the end of the day, we are incurring 120,000. The difference is what? 20,000.
20.
So we just find a difference. If you're using marginal costing, it means that the 120,000 should have been written, but we wrote off only 10,000. So the difference of 20,000 should go and be written off from the profit. That is for marginal costing. So the fixed overhead calculation depends on the type of the costing techniques that you are using. If you are using marginal costing, it is the budgeted minus the actual. But if you are using absorption method,
Costing.
it means that part of the overhead will be absorbed into the variable cost, isn't it?
Yes.
So what we do is that we calculate it on the cost level and also on the absorption level. So we have two variances. We have the fixed overhead expenditure variance, which is the actual, or which is the budgeted overhead. Budgeted what? Budgeted fixed cost minus the what? Budgeted fixed cost minus the actual what? Fixed cost. Actual fixed cost. Okay. Another one that we do is that, okay, if the budget is for 10,000 units and we are now producing 12,000 units, it means that part of the fixed cost has been sent to 12,000 units, which should not be sent there, isn't it? So we try to find that overhead to that variance to, which is the fixed overhead volume variance, which is calculated as the budgeted output, budgeted production. You can say budgeted production level, budgeted production minus the actual production or actual unit produced, actual production. Then you multiply all by the standard rate of the fixed overhead. The standard overhead of the fixed overhead.
Linus,
Yeah,
please, the fixed overhead,
yeah.
the first one.
Okay.
Is it budgeted cost? Which cost is that? Is it budgeted fixed?
Budgeted fixed cost minus the actual fixed cost. That is the fixed overhead expenditure.
Okay, so I wanted to be sure.
Fixed overhead expenditure variance. Are we okay there?
Yes,
Okay.
please.
So let's pick a question and we solve it, and we move on to advanced variances the last time. I'm loving this class. All right. Okay, sometimes they can ask you about what is causing the adverse or the differences, or what is causing the variances. So sometimes you have to think about them. If you are having adverse for direct material costs, it means that maybe the quality level of the material has changed. So you have to buy more, or you have to buy quality that will increase the cost. So if you are buying quality, the cost will automatically increase. Are you okay? It can also be like the labor that you have, they are not efficient. So there was a lot of wastages in the production process that you have to go and buy additional quantity of the raw material. So sometimes you don't have to, these reasons over here, they are general reasons. Sometimes you have to look at the units and give the reasons yourself. Okay. Without wasting much time, ladies and gentlemen, let's take question 1. Who is reading? Who is reading?
Let's see one.
Who is reading for us?
Please, we are coming. Let me open the book.
Please, Evo, you didn't take us through the non-production overhead
The
and
non-production
sales.
sales, we do it later. I want to do the cost first.
Okay.
Yeah.
Okay.
I don't want to overload you. So let's do the cost. If some people understand how to calculate it before I move on to the sales.
Okay.
Then we prepare reconciliation statement. Then we go to advanced one. All right. Who is reading for us?
No.
Okay, I'll do. The Lens Limited manufactures high quality wooden chair using Odum source from sustainable forests. The company began trading 2 years ago, having identified a niche market for the product. During the year, the Lens Limited was forced to purchase wood from a different company, as the usual supplier did not have sufficient stock available. The company operates a standard costing system, a standard variable costing system, and details relating to the most recent financial period are shown below. Budgeted information as production units, direct materials, direct labor, variable production overhead, fixed production overhead, and then actual production, actual information, production units, direct material costs, direct labor, variable production overhead, and fixed production overhead. Required: A, prepare standard cost card for one wooden chair. B, calculate 6 variances in as much detail as the information above permits.
Baba, are you done?
Yes, sir.
Okay. Wait for me small.
Okay.
It's about to rain here, so I have to arrange something.
Okay.
Okay. So about what are they saying? They say we should do what?
Now we should prepare a standard cost card for one wooden chair for A. Then
Okay.
B, calculate 6 variances in as much detail as the information above permits.
Okay. What costing system is the company using?
Standard variable costing,
And that is what?
marginal costing technique.
Okay. Marginal costing. Okay. All right. Did I tell you the difference between standard costing and budget?
You didn't explain, but it's in the leaflet you gave us.
Okay. So
But you say standard has to do with unit activity level.
yeah, standard is always at the unit level.
Unit level.
Yeah.
And budget is for a
Total
wider
level.
Okay.
All right. So what is our budgeted information? We use the budgeted information to get our standard activities.
Cost card.
Okay. So direct material. What is our budget? We are saying that we are going to use what?
10,080 square meters for June at a cost of 282,240.
So what would be the cost per square meter?
You divide it.
And that will give us how much?
It will give us 0.075 Ghana cedis per square meter.
Calculator.
That is per square meter, isn't it?
Yes, please.
Okay. The question is asking us to prepare a standard cost card for one wooden chair, isn't it? Okay, so it means that they're using a square meter Odum wood to produce the chair.
Yes.
Okay. So the 282,240 over here is for the total what? Is for the total unit that you want to produce, isn't it? The 2840 over here, the 282204 over here is for the total unit that they want to produce, isn't it?
Is it there for the Odum? Is it for the Odum?
The question says that the Links Limited manufactures higher quality wooden chair using Odum source from. So we use Odum to produce the wooden chair, isn't it?
Yeah.
What is the budgeted unit that we want to produce?
134,400.
And what is the budgeted cost for the direct material?
282,240.
And that 284 is for all the unit that we want to produce, isn't it?
Yes.
Okay. So if this is for all the unit that we want to produce, what would be direct material cost per unit? Because the question is saying that we should do
We
it for the
divide it.
yeah. So we are doing this for the finished goods, not the raw material. The one that we are doing first is for the raw material. But we are doing this for the finished goods. We are doing this for the finished one. So what you do is that the easiest way of doing this is to take your direct cost over here, take all your direct cost over there. Let's look at the let me look at the A part. Standard cost for what? Baba, would a fixed cost be part of what I'm doing?
No, please.
So you are not hearing me.
No.
No.
Assembly.
The part of it.
I mute myself.
Please go over.
Assembly. Okay. What I'm saying is that, let me explain again. What I'm saying is that, you see, all these costs over here are for the total production, which is 134,400, isn't it?
Yes,
But the
please.
question is saying that we should prepare the cost for one wooden chair. The wooden chair
Unit.
is the finished good, which is the 134, and these are the costs relating to the 134. So what we do is that the company is using variable costing method. They are using marginal costing method. So we just look at the direct cost. We take all the total direct costs over here. Then we find the total cost. Then we now divide it by what? The units. Then we find the cost per the wooden chair. Are you okay?
Yes, please.
Okay. Okay. So let's find the total cost. I was thinking, but I was talking, nobody's hearing me. So
So we didn't respond.
So I realized
Or you
that
didn't
no,
ask any question.
nobody can hear me. Charlie, it's not easy. So what will happen? We bring the production unit now, isn't it?
Yes.
So this is for all the 134 units. So 134,400 units. So what do? We divide, isn't it?
Yeah, Linus.
Yeah.
Please, we didn't add the fixed overhead because we are using the
No.
marginal costing
Exactly.
method. Okay.
That is what the question says.
Okay.
So what is the cost per 1 unit?
7.38.
Okay. 7.38. That is the thing. So that is the cost per. Okay. I hope we are okay with this side. Okay.
Yeah.
So the one that we are using first, we are finding the cost per the material cost per kilogram, but the material cost per the raw material that they are going to use, which is going to be a long way for us. All right. So if they ask you this one, this is what you do. You just total all the costs divided by the unit that they are producing, production units. Can I move on to the variances now? The next question is what? Calculate 6 variances in as much as details as the information above permits. So the first thing that you have to ask yourself is that, do I have material here? Do you have material?
Yes.
So it means that I can calculate material price and material usage, isn't it?
We can do for labor too.
I can do for labor. Do you have variable production overhead here?
Yes.
Okay,
Yeah.
but I want to tell you the easiest one. If they are using marginal costing method, calculate your fixed overhead because it's the simplest. Subtract the budgeted from the actual. That is the only way
Yes.
that you can do it.
Mm.
So you can do the variable overhead, one for variable overhead, one for fixed cost. Are you okay? All right. So let's look at this now. Let's let's look at this now. Let's look at this. So let's find the material. Let's look at the variances, which is the B part. B part. The B part, we are going to do material price what? Variance, which is equal to standard what?
Yeah.
Standard price minus what?
Actual price.
Actual price times the actual quantity purchased, isn't it?
Yes.
So into bracket times the actual quantity what? Purchased.
Purchased.
So the question now is, what is our standard price now? We have to come and find our standard price. So what will be the standard price in the question? Sometimes they will give it to you, but this one you are not given, isn't it? Okay. What is the budgeted total material cost?
2,824,240.
And how many units are we producing with that?
134,400.
So it means that all this is for this. So what will be the price for 1 square meter?
10.
You divide.
You divide and give me the answer.
That's 28, right?
28.
28.
28.
So I'll have the standard price to be 28 minus the actual, isn't it?
Sure.
So how do we get the
28.
actual? Actual to sometimes they'll give it to you, but we are not giving. But they give us
Let's
a
go there.
total actual cost incurred. What was the unit?
That's okay.
That is 30024.
Divided by
Divide
10,800.
27.8.
That's 27.8.
27 point what? 8.
8.
Okay. Then we multiply by what
That's
is the
fine.
actual unit purchase?
10,800.
10,800. Okay. 10,800. What will be the answer?
$2160 adverse.
2160.
2160 adverse.
Who is saying that is an adverse?
Our standard and actual.
Who is saying that is an adverse? You are planning to spend 28 cities. At the end of the day, you
28.
spend 27.
Okay.
Are you spending
It's
more?
favorable.
Favorable.
Are you spending more?
No, we are spending less right now.
Okay.
Linus, please, we are getting feedback.
Feedback from
Your end.
me. Is it okay
Yes.
now?
It's
raining here.
okay.
So what is the answer there?
2160.
2160. Favorable or adverse?
Favorable.
Let's count to material usage. Material usage is calculated as what? Standard quantity minus what? Actual quantity times standard what? Price. Okay. Okay. So what is our standard quantity? Let's go to the question. Let's go to the question. How do we get our standard quantity now? Does someone have an
The
idea
standard
about how to
quantity-
get a standard quantity here?
It's 10,080.
That is for the total budget unit. We want to know it for this thing. We want to know it per unit. Okay. Another way of doing it is that, okay, if 10,080 is for how many units are we producing? 134,400, isn't it?
Yeah.
The 10,080 is for 134,400 units, isn't it?
Yeah.
Okay. If that is for 134,000, how much will be for 135? You can do it and get it, but I'll show you another way of getting it. All right. Okay. Let me say this before I'll move on. I'm saying that I'll use 22,000 kilograms to produce 1,000 units. So how many units am I using per unit? How many kilograms am I using per unit? I'm using 2,000 kilograms to produce 1,000 units. So how many kilograms am I using to produce 1 unit? Are we here?
That is 2 kilograms.
That would be 2 what?
Kilograms. To
How do you get
produce
how do you get a 2 kilogram?
Yeah. You divide the total kilogram by the total units.
So the material usage over the unit that you are producing, isn't it?
Yes.
Okay, let's come here. How do you find the material usage per unit over here, the square meter per unit? How are you going to find it using the same idea that I showed you?
So you divide the material, the material amount, which is 10,080, by the output you anticipate to produce, which is 134,400.
So that will give us what?
0.075.
0.075, isn't it?
Yes.
So that means if you
Square
are producing
meters.
one material, you use 0.05 square meter for 1 unit, isn't it?
Yes.
But what was the production level? What was the actual production level?
135.
So if you are using 0.05 for one unit, how many square kilometers do we have to use for the 135 now? What should be the actual usage? What are we getting? Someone's listening is on loudspeaker. One unit is how much? Is 0.075 square meter, isn't it? And we are producing 135. So under normal circumstance, how many square meter do we have to use for the 135 units? That's what I'm asking.
We have 10,125.
10,001 and what?
25.
So that is the standard quantity. The standard quantity is the standard usage requirement times the actual unit produced. That is how we calculate the standard quantity. So the standard quantity is 0.075 per square meter. How many units did you produce? I produced 135. So what should have been the square meter that I should have used on the 135? You multiply, then you get the 10,125. What was the actual unit used? What was the actual square meter used? That will always be given to you in the question.
Yes.
What was the actual direct material square meters used?
Okay.
It was 10,800. So it was 10,800. What is the standard rate?
The standard rate for the raw material
Is 20.
Please, I still don't get the 10,125. The standard quantity.
Did you get the 0.075?
No.
Where were you?
I was here.
Okay. I'm saying that I want to produce 1,000 units. And I'm using 2,000 kilograms to produce 1,000 units. How many kilograms am I using to produce 1 unit?
2.
2. How did you get a 2?
I divided.
Okay. Come to the question. How many units are they budgeting to produce?
134.
What is the total direct material they are saying that they are going to use to produce that?
10,080.
So if you want to know the material per 1 unit, what are you going to do over here?
I divide the material by the units that I plan to produce.
Okay, divide and give me the answer.
13.33.
You are saying what?
13.33.
You are not the one talking.
0.075.
0.075. Okay, you are closer to Freeman. Show her how you got the 0.075. It is a 080 divided by the 13, not this divided by this. No. Freeman, are you okay?
Yes, please.
Okay. So every unit that we are going to produce, we are going to use a material of 0.075, isn't it?
Mm-hmm.
But what was the actual unit produced? What was the actual production level?
Okay. 135, I guess you.
Okay. So under normal circumstance, how many square meters do we have to use on this? Looking at our standard rate, the standard usage that we have set, which is a 0.075. All things being equal, how many square meters of the Odun wood do we have to use for this production?
Okay.
Kathy, I'm waiting for you.
I'm coming.
It will be the standard usage at actual activity level.
Kathy, 1 unit is 0.075. 135,000 units will give us what?
10,125.
Okay, so the first one, Freeman didn't get it. Kathy got it. Now Freeman is getting it. Kathy is not getting it. Very interesting. Kathy, I'm still waiting for you.
Mm-hmm. So, Linus, am I going to use the 10,800 or I'll use the 10,000?
The 10,800 is the actual direct material used. That is the actual direct material used. But what should we have used on the production? Looking at, we saying that, okay, for every unit that we are going to produce, we are going to use 0.075. At the end of the day, we have produced 135. So what should have been the material that we should have used, not the actual that we use? We should have used based on our standard. That's what I'm asking. Kathy, I'm waiting on.
I'm getting 0.074. 0.074 or
What did you do
74.
before getting that figure? Did you
I
get a
divided
0.075?
Yes, that one.
Okay, that means one
I
unit,
divided the
one unit of the wood is what? 0.075, isn't it?
yes.
How many units did you produce? How many units of the wood did you produce?
135.
So if one unit is 0.075, how many square meters will be 135?
I multiply.
So what are you getting?
Then 125.
Okay. Standard quantity is calculated as the standard usage times the actual production. All right. So I can move on now.
Yes.
Okay. So the 10,125 minus 10,800 times 8. What are we getting? What are we getting?
675.
675. Then we multiply by the standard rates. What are you getting?
1,800.
Is that going to be adverse or favorable? Adverse or favorable?
Adverse, we used more.
Okay, so that would be adverse. That is Freeman, isn't it?
This is Kate.
Okay. So that will give us 18,900 adverse. So which one are we going to do again? Labor rate what? Labor rate variance, which is calculated as the standard rate minus the actual rate times the actual hours paid for. Actual hours paid. Let me make it 18. Actual hours paid. Okay. So let's come to the question. Were we given our standard rate? Were we given the standard rate? In the question, were we given the standard rate? Were we given the standard rate in the question? Baba is not there. Since Baba is not there, nobody will talk. Mercy, were we given the standard rate in the question?
No, sir.
So are you saying that the time I was talking, you are not hearing me? Because I didn't mention your name. All right. So how do we get a standard rate now? Patty, are you there?
Yes, please, I'm around.
So how do we get the standard rate now?
The standard rate for which one, please?
Of the labor.
You divide the
I'll do what?
we are using 33,600 hours,
Yes.
and that one is costing us 483,840.
Okay.
And we are using it to produce 134,400. So if you
Okay.
want to know the rate for a unit, you
No,
divide the
we
amount
are not doing the rate for unit. We are doing the rate for hour. It's labor.
hour, sorry. So you divide the cost, the total cost that you are paying for the labor by the hours, total labor hours.
So what are you getting?
Please hold on. Oh, please, my this thing is going off. Let me plug it, I beg.
Okay. For us to find the rate per labor hour over here is the total money that we are paying over the budgeted number of labor hours. So that will give you 483,840 divided by 33,600. Someone should do that and give me the answer.
14.4.
14. Okay. 14.4. Okay. What is the actual rate now? Let's come to the actual side. We are not giving the actual rate, isn't it? But we can get that ourselves. That will give us the 486,000 divided by what? 27,000. What are we getting?
18.
We are getting what?
18.
18 cities. So what is the actual labor hours used? What was the actual labor hours paid for or used? What was the actual labor hours? The person speaking, I can't hear you.
27,000.
It's what?
27,000. 27,000 hours.
Okay, that is the actual hours paid for. So 27,000. What are we getting? What will be the answer? What will be the difference? It's what? I can't hear the person. I can't hear the person. What is the figure there?
To be 97,200.
97,200.
Sure.
Adverse or favorable? Would it be an adverse or favorable?
Adverse.
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 We are paying more. Okay, the next one is the
Uh,
labor efficiency what? Which is equal to the standard hours minus the actual hours times the standard rates. Okay. So how do we get a standard hours now? How do we get a standard hours now? How do you get a standard hours now? What will be the standard rate per unit? What will be the standard hour per unit rather?
14.4.
It will be what?
14.4.
What point what?
14.
14.4. Is that the standard hours per unit?
Yes.
That is standard rate per unit, standard rate per hour, not standard hours per unit. Okay, how many quantity are we projecting that we are going to produce? What was our budget output?
That will be
What was the
4.
budgeted
Standard
output?
hours will be 4.
Standard hours will be what?
4.
No.
Okay.
Our budgeted production level is what? 134,400, isn't it?
Yeah.
What was the budgeted hours that we are saying that we are going to use for that particular production level?
33,600.
So how do we find the standard hours per unit now? We are using,
And that will be
what? If you are doing 134 divided by 134,400 divided by 33,000, you are finding labor rates per unit, labor cost per unit.
oh, okay. Okay.
You are finding labor cost per unit.
And
that will be what?
0.25.
That would be 0.25. That is per every unit is 0.25. How many units are we producing? What was the actual unit produced? So what would be the total labor hours that we should have used on that particular one?
3750.
Okay, 33,750. So labor efficiency is equal to 33,750 minus what? What was the actual hours used? 27,000. What is our standard rate?
14.4.
14.4. So what will be the difference?
You got 97,200.
Adverse or favorable?
Favorable.
Okay. 97,200. The next one will be the variable variable overhead. Variable overhead expenditure variance, which is also calculated based on the same thing. We use the standard rates minus the actual rates multiplied by the what? Multiplied by what? Actual labor hours paid for. We do it based on the labor hours. We do it based on the labor hours. Let's come to the standard rate of the variable overheads. What will be the standard rate? What will be the standard rate per hour? What is the standard rate per hour? You have what? If I can't hear you, put the answer in the comment section. Just send it as a message. I'll read it.
You get 6.72.
6 point what?
72.
Yes,
per hour.
they say it's based on direct labor hours. So the total budgeted cost over the total budgeted labor hours. 225,792 divided by 33,600. You get 6.267.2. So 6.72. What is the actual? What is the actual? What will be the actual rate? What will be the actual rate?
18 cedis per hour.
Actual rate is what?
18 cedis per hour.
18.
No. I didn't pay the rest. 194,400.
7.2.
7 points.
It's 7.2.
Okay. Multiply by the actual labor hours. The actual labor hours is what?
27,000.
Okay. So what will be the difference?
12,960.
12,000.
960 adverse.
12,960 adverse. Okay. We supposed to spend 7.2. We supposed to spend 6.72. We spend 7.2. So we spend more. That is adverse. Okay. The next one will give you us the variable overhead volume variance, which is also calculated based on the same thing like the labor hours. So we just use the same thing for the labor. 33,750 minus 27,000 times the standard rate of the variable. What is the standard rate for the variable? What is the
6.72.
Okay. So what will be the answer?
Fifteen 8,928. Please, someone should confirm.
Is that 15 what?
15,8,928.
No, you are wrong.
Am I right?
You are wrong.
Okay, 33,750.
45.
45
45,360.
adverse of favorable.
Favorable.
Okay. The last one will be the fixed overhead was. The fixed overhead expenditure variance. This one, since we are using marginal costing, we just do it on the total levels, which is the budgeted fixed overhead cost minus the actual overhead fixed cost. So what is the budgeted one?
29,200.
29,200
200.
minus the actual.
Actual is 3150. Difference
30
950. Adverse
31,
150.
150. So
It's
what?
3150.
3150. Okay. What is the difference?
950 adverse.
That is adverse. We should have spent
2,200.
but we end up spending more. So that
Yes.
is so the difference is 950. Okay. The difference is 950. So that is all. That is all this question is asking us to do.
I have a question.
Yes, you can ask.
With the first part, that's the material usage.
Yeah.
Can you clarify on the 10.125?
I can't hear you. Speak
On on the material usage,
Okay.
the standard quantity. How did you get the standard quantity? I'm not the 10.125.
The thing 125. How did I get it?
Yes.
Okay. The standard quantity is calculated as the standard quantity requirement.
Material usage. Okay, material usage.
Material usage times the actual production. It means that if we are saying that we are going to use 2 CD, at the end of the day we produce 4,000. It means that all things being equal, we should have used 8,000 for the thing, isn't it?
Yeah.
Okay. So if you want to know the material usage requirement per unit, we are saying that we are going to use 10,080 for 134,400, isn't it?
Okay.
What would be the square meter per unit? We take this divided by this one. So that would be 10,080 divided by 134,400. We are
Sure.
getting 0.075, isn't it?
0.075.
That is for every unit that we are going to produce, we are going to use 0.05 square meter of the Odum wood, isn't it? At the end of the day, we produce 135,000. So if we are using 0.075 per unit, how many square meters of Odum wood are we going to use for the 135? So what did you get?
0.05 times
135,000, isn't it?
okay.
So what did you get?
10.125.
Okay.
I was
Yeah.
multiplying to
So you're
with
okay now?
the standard units.
Okay.
Yeah, I was multiplying. Thank you very much.
Linus,
Yes.
please, the same side,
Okay.
the 28, how did we get it?
The 20 what?
The 28, we had standard pricing minus actual pricing, the 27.8, I'm okay, the 28.
The 28, how did you get a 28?
Please, the material, the SP.
The standard rate, isn't it? The standard price for the material.
Yes,
Okay,
please.
all right. So what is the total budgeted cost?
282,240.
What was the total budgeted material usage?
10,080.
So it means that this 280 is for all of this, isn't it?
Yes, please.
So if you want to know the cost per square meter, how do? We divide the total cost by the material requirement.
Okay.
What did you get?
A minute, please.
You got what?
Okay, I got 28.
So you're okay with that side?
Yes, please.
You see, this question is it looks simple, but it's too much.
Please, Evo,
Yeah.
can we always get your workings posted on the Telegram?
Yeah, I've saved this one, so I will send it on the platform.
So that we'll stop writing, we'll only take good notes. If we write and be listening, before we realize, we get lost.
Okay, so before we move on to different thing, are we okay with this one?
No,
Is-
I think for me, I would have to go over it before I'll be fine.
okay. So you there, you are out.
Stay, please, can you come?
You said, Jocelyn, yes, we calculate the the variable overheads is assumed to vary with the labor hours, so it's the same thing. The efficiency is the same as the labor, the variable overhead volume is the same as the labor efficiency, because we are going to use the labor hours, so we use the standard labor hours and then the actual labor hours, but only that the standard rate that we are going to use will be for the variable overhead, not the labor, so it's the same thing. All right. Portia, you wanted to say something?
The variable calculation, the two formulas that you use, the expenditure and then the efficiency. The formula that I know for the expenditure is the totals. You just pick the standard, the totals, and then the actual totals.
That is for fixed overhead. That is for fixed overhead.
Okay, so doesn't apply with the variable one.
No, the variable means they are going to vary with the output level. So if you produce more, you incur more cost. So that is why you see that the fixed overhead expenditure variance, we just take, even the fixed overhead, if you are using absorption costing, we are not going to do this. We calculate additional overhead, additional variance, which is the fixed overhead volume variance. But this one we are using marginal. So we just take the total because we are going to write them off. Are you okay?
Okay, please can you come again with the formula for the expenditure? So that's it.
The expenditure is a fixed overhead expenditure. If you are using
no, for the variable overhead expenditure.
The variable overhead expenditure is the same as the material and those ones, but this one we are going to use their standard rate and then the actual rate. It's the same thing for the labor. It's just like the standard rate minus the actual rate times the labor actual hours paid for. That is the actual labor hours used. All right. But this case, the standard rate, they are going to give you the variable overhead, their standard rate too. So that is the actual rate and the standard rate that you are going to use. Okay.
Thank you very much.
Okay. Don't go and use that thing, say budgeted for variable. Variable, we assume that they vary with the output level. So if you produce more, you incur more. If you produce less, you incur less. Are you okay? All right. Let's see whether we can solve additional one question and go. Okay. Can we try the two? Let's try the two. Let's solve the two and we call it a day. Tomorrow, next week, we look at the labor and we move on. Question 2. Question 2. Who is reading for us? Some of the corporate people, they have joined the class. Mercy, read for us.
Okay, sir.
Right.
Odumasi Limited has just introduced a new standard marginal costing system to assist in the planning and control of the production activities for the single product, which the company manufactures. The system became operational on 1st March 2021. The management accountants has consulted with the senior engineer and they have agreed on the following standard specification to manufacture 1 unit of the product ticket: direct material, direct labor, variable overheads. Sir, please, can you move up?
Okay.
According to the marketing director, Odumasi Limited operates in the industry where the budgeted selling price is normally calculated to achieve a markup of 30% on cost. The budgeted level of production and sales activity has been agreed with both production managers and sales staff at 24,000 units per month. The actual results for the month of March 2021 are as follows. Sales, production, DMAT, DLAB, variable overheads required. Calculate the relevant variance for March 2021 under the headings of sales, materials, labor, and overheads.
Okay, that is okay. The sales, we haven't done that yet, so let's leave the sales part. But let's look at the materials, the labor, and then the overheads. Okay. So this is the information given to us. The direct material. What is the direct material usage requirement per unit?
4 kg.
4 kg. Labor is what?
2 hours.
Variable overheads is what? You can say the variable overhead is also 2 hours.
Yes.
That's what I'm telling you, that variable overhead also varies with the labor hours. Okay. So this information is about sales. Forget about it. We haven't done the sales yet. Okay. So what is the production for the year?
23,000.
23,000.
Yes.
What is the direct material purchase?
90,000.
At how much?
62.
So what will be the price per one quantity purchased?
Sir, please, can we see the question? Can you go back?
You have this question on the platform, or you see it on your phone.
Yeah. I told you my laptop is off. We have light out, so I'm using my phone.
I'm also having loud out over here.
Okay. That's okay.
This is a question. You can close your eyes if you don't want to see.
The question 2 that we are working on.
Question 2, yeah. Kathy, can you see now?
Yeah, please, can you go to the production?
Okay. Are you okay now?
Yes, please.
Okay. So let's look at the distance, the calculations under material. Under material, how many variances do you have to calculate there?
2.
Price and usage.
Price and what?
Usage.
Okay. So let's come here. We have the material price. The price is calculated as what?
Standard price.
Standard rate.
Standard
Standard price minus actual
price.
Multiplied by what?
The actual quantity.
Actual quantity purchased.
Purchased. Okay.
Actual quantity purchased. Okay. So let's come here. What is our standard price in the question?
The question.
Standard price in the question is what?
Standard price in the question is 1.75.
1.75. That is the standard price.
Right.
Okay.
Minus. Okay.
Minus the actual. What is the actual price? Are we given? Are we given?
You have to work for it.
Even if you don't want to work for it, you can just use your standard rate to multiply the actual quantity used and subtract it from the 162. It's also another way of doing it.
Okay.
Okay. Because at the end of the day, you multiply all of them.
1.75.
Okay. So you have worked down already, isn't it?
Repeat, you said do what?
I'm saying that if you don't want to divide this 162 by 90, you can just use the standard rate to multiply the 90,000 kg over here. Then you compare with the 162.
Okay.
Are you okay?
And
And
the
the standard
difference is
rate was
4,500.
The difference is 4,500.
yes, you are
If
running
it's
fast.
after, what are you getting? If you divide it, what is the standard rate?
That will be 1.8.
1.8. You see, sometimes
1.8.
you getting
Yeah.
the actual rate, it will be decimal, which will be recurring. So sometimes just multiply the actual quantity by the standard rate and compare with the cost. So that would be 90 kg. The actual
Nylon.
yeah.
But so the difference we are getting is 4,500. Is it correct?
How did you do
Yes,
it? If you do it the two ways, you
it's
get the same
correct.
answer.
45,000.
Yes, 45,000.
You get the same answer. If you do it the two ways, it will be the same answer. 45,000. Adverse or favorable?
Adverse.
Okay. That's it. What I'm saying is that you see 162 over there. No? The 162, you divide by 90,000, isn't it?
Yes.
I'm saying that sometimes you can divide this, the answer you'll be getting will be 2.777777 something. So if you are getting that, what we have to do is I just take your actual cost, you multiply your standard rate by the actual quantity purchase, then you compare the one with the actual cost. So in this case, you can just do 1.7 times 90,000 minus the 162. That's all. You get the same 45,000. Are you okay?
Are you sure?
Do it and see.
No, but the answer is not 45,000.
It's not 45,000.
Do
It's 4,000.
1.75. 1.75 times 90,000.
Eh,
What are you getting?
1.7.
45,000.
One what?
1.75 times 90.
It's 157,500.
1,575.
Subtract it from 162 and see.
It's 4,500.
What do you mean?
It means that the figure
It's
that you people two are giving to me
4,500.
over here is wrong.
It's 4,000. We just gain 10.
Yes, this is not 45,000. It's supposed to be 4,500.
500.
It's 4,500.
It means that what people are giving to me over 45,000 over is also wrong. There is no way you do that and get the wrong answer. Actual quantity. Kati, have you gotten the same answer?
The formula you are telling me, I'm getting 4.5. I want to test this one too.
Okay, test this one too and see.
This one is 4,500.
So where from the 45,000?
And he's the person who doesn't know how to use a calculator. Okay. So what is our material?
Thank you.
What is our standard quantity? What is the standard quantity in the question? Standard quantity. Okay. How many units, how many kilograms are we using for 1 unit?
4.
4. So what is the production?
23,000.
So how much should we have used before?
You multiply by 4.
Then you get what?
92,000.
92,000. But what was the actual quantity used?
90,000. 90,000.
90,000. So what is happening there?
Favorable.
So what is the standard rate?
1.75.
1.75.
Okay. What is the amount?
3,500 favorable.
3,500 favorable. So we go to what? Labor, isn't it? So the labor, the first one that we are going to do will be the what? The rate, isn't it? The rate is what? Actual standard rate minus what?
Actual.
Yeah, please, the
Actual
rate
rate
is
times what?
Actual hours paid for.
Okay, we are here to look at what we call the labor idle variances. Okay, maybe next week we do that. Sometimes they will pay, the hours worked will not be the same as the hours that they pay for. It means that there are some hours that they pay for which they didn't work for, which is the idle time variance. Okay. So what is the standard rate in the question? Standard rate is what?
10 cedis per hour.
Okay. Standard rate is 10 cedis. What is the actual rate?
12 cedis per hour.
12
That's
cedis.
good.
Okay. Okay. Confirm.
Let me confirm.
Okay. What was the actual hours used? The actual hours used is what?
18,000.
Actual hours used.
48,000.
What's it?
Okay. What would be the variance? $96,000 what? Adverse. Is it adverse?
Yes, it adverse. 96,000 adverse.
Let's go to efficiency. Efficiency is what? Standard hours. Standard hours minus what? Actual hours. All multiplied by the standard rates.
Please change the standard hours.
I know.
Linus, I want to ask something. The rates, we're
Yes.
supposed to use 10 and we use 12. That will cost us more, or?
And that is, we are spending more. So that is why it's an adverse.
Okay.
So if the cost is against us, if the cost is increasing, that is against us. But if it will be revenue, that will be favorable to us.
Okay.
So if the selling price was 10, and now we are saying that it's 12, you can see that it is going in our favor.
Okay, by rates, yeah. Okay.
Yeah. But if it is cost and it is increasing, that is going against you. Are you okay?
I'm okay.
Okay. Let's count to the standard. What is the standard hour per unit? Standard hour is what?
2 hours.
So what was the total production? What was the total unit that we produced?
23,000.
If you are using 2 hours, what should have been the hours that we should have used before?
26,000 hours.
26 or 46?
46.
46 hours.
46,000. What was the actual hours used?
Please, can you go back?
Go back to
48,000.
okay. Go back to where?
I'm okay. You've done it already.
What is the standard rate?
10.
10 cedis per hour.
So what is happening? Increase or decrease?
Increase.
By how many?
20,000.
Now with 20,000, adverse or favorable?
Adverse.
Adverse. So the next one is the variable overhead, isn't it?
So I'm asking a question.
The question is what?
When we did the labor variance,
Yeah.
the 92, I thought like the first example that we solved would be dividing the 4 kg by the
hours. Okay.
You say the one, come again. The network is bad.
Units. Then what we get, we multiply it.
You said the one, come again. Start again.
4 kg at 1.27.
Kati.
You are in material.
I'm saying that for the
Yeah.
labor, the 92, like the first one that you did, for the material rather, sorry, for the material, the 92,000. I thought the first example that we solved, I thought when you have the usage, that's the, let's say 4 kg, you divide it by the production, the budgeted production unit. What you get, then you multiply
Hey.
I'm praying that your network should not go bad, but it's going bad.
unit. Or
I'm praying that your network should not go bad.
it's not me, it's raining here, so.
Okay, you see the 4 kg over there is per unit. So one unit is 4 kg.
Okay.
But the one that we did first, they give us the total unit, the total material requirement for the total unit. That is what we divide to get the requirement per unit. But this one, they have given us the requirement already. So you can see that, yeah.
Okay, you please finish with it.
They say following the standard specification to manufacture 1 unit of the product, turkey. So 1 unit of turkey will be using 4 kg. Assuming they should give us, they are giving us, assuming they are giving us this one, kg, then they are giving us, what is the budgeted unit? It's 24,000, isn't it?
So you multiply by it. Okay.
So instead of them giving us 4 kg,
already, so
they
you just
give us,
multiply straightforward.
instead of them giving us 4 kg, they give us 96,000 kg. That is why we divide the 96 by the 24,000 to get a 4 kg. Joycelyn, are you okay?
Linus.
Yeah.
I am asking about the actual rate for labor.
Okay.
The 12, how did we get it?
The actual rate. What was the total cost? What was the total amount paid?
Okay, 162,000.
That is material.
Oh, okay. Your
Please
Kesa
go
is
and bring your total cost.
48,000.
What was the total cost paid?
Please, your Kesa is it 576? Your Kesa is on the first. Okay, 576.
For how many hours?
Okay, 48 hours.
So
48,000. Okay.
1 hour will be how much?
Please, a minute.
You're not talking again.
1.58.
Are you sure? No. 576,000 divided by 48 hours is how much? 48,000.
Is it 48 or 48,000?
That is 48,000. 576,000 divided by 48,000 is what?
Okay.
I'll give us 12.
Remember what are you getting?
Yes, 12.
It's 12.
Yes, please.
Okay.
Thank
we have
you.
the standard rate minus the actual rate times the what? The actual labor hours worked for. So what is the standard rate for variable overhead? Who is using the calculator like that?
8.25 per
If your
hour.
calculator is not working, I will bring you one to your house. 8.25, isn't it?
Yes.
What is the actual rate?
Oh. That is 7.29.
Are you approximating it or what?
Yes, because 7.2916.
That is why I'm telling you that if that is happening, just take all the 350,000, then you just multiply the standard rate by the actual labor hours worked.
Yeah.
So someone will be asking, how did you get a 7.9? The variable overhead is valued with the labor hours. So the total is 350,000. The actual labor hours is 48,000. So you just divide the 48,000 by the 350. It's based on labor hours. So that's what he's getting. And I was saying that another way of doing this is that if you are going to get decimals, just multiply this by the actual labor hours and subtract the answer from the total cost, which is 350,000. What are we getting?
You get 46,000 favorable.
From over here, I'm getting 396,000 minus 350,000, isn't it? Okay. So the rate will give me, what is the difference?
Please use the other formula to let's see.
Do it yourself.
That's 46,000 favorable.
Okay. 46,000 favorable. So the next one is what? The volume, isn't it?
Yeah. Well, yeah.
Volume is what?
You won't get it.
Standard labor hours minus actual worked, or multiplied by the standard rate of the variable cost. So what was the standard labor hours? We have even determined that already.
46,000.
That was 46,000. Minus what? The actual is what?
48,000.
The standard rate is what?
48.
The standard rate is
8.25.
Okay, what is the difference?
You get 16,500.
16,500.
Add base.
Okay. This is question 2, isn't it? All right. So too much of everything is very bad. Let's stop here. We move on to sales.
Lionel,
Yes.
I didn't get with that formula. I didn't get it all.
So use the one that you can use to see whether you get it. Okay. Any question? Kat, you are getting something which is similar to that, but it's in decimals. So I'm saying that because of the decimals,
I wanted to get the actual, you see.
the actual you are getting
rate,
7 point something.
The standard rate was 8.25.
Okay.
And the actual I'm getting is 7.29.
It's not 7.29. Say that you are approximating it to be 7.29.
Okay.
So if you do that, you are going to get something which is similar, which is closer to what we have gotten, but it will not.
It's not closer. It's not closer. That's why I wanted you to do it. And let me see. It's not closer.
What did you get?
You see, 8.25 less 7.29.
Okay. Multiply by what?
By 350,000.
48,000 or 350,000. The actual
that was 48,000. Yes. Okay. So you see, if you had not answered me, I would have been using the 350.
That is your own problem.
Thank you.
Do you have any question?
I won't ask again.
Why will you even ask? Hey, Apostle Mike. Mercy, Prima, Olivia, Prince, Richard, Eben, Joycelyn, Baba. Is this one, is it accounting code or ACCTS? Who is that? All right. Up to this level, we are okay, isn't it? Okay.
Linus,
Yes.
please, so when you do it this way and you get this figure, are they going to mark it for you?
They will mark. I mean, you just tell them that you have approximated it. I mean, it's just the difference is just 80, which is not that much.
Okay.
All right. So that is we don't have any...
I thought you say you are not an examiner.
Today I don't want to say anything. I don't want anyone to say anything about me. So if oh Charlie, it's okay. Okay. Ladies and gentlemen, if you don't have any other question, I'm signing out. I will see you again. All right. I hope you all know my name.
It's a common now.
My name is a proper now. Don't say it's a common now.
Common.
Line on cement.